Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Coti. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now let's get into the TA. And before we get into the video, I quickly want to mention Apex One AI. So this is a very interesting project that is based on AI technology and allows you to farm using crypto pairs. So they already have a platform out. They have their website, which we're on right now. The team is fully transparent, and some of the features are farming using artificial intelligence, using cryptocurrency pairs. You have liquidity pools, you have DeFi involved. You can take a look at their white paper, and if you want to take a look at their team, all of that is available on the website. And they also have a native token out already called Apex. And here is how the platform looks. The website is very well designed as well as the platform. It is easy to navigate. As you can see, if you go to Apex AI, you have farming, you have yield farming, and you have some of the new features that they're developing using the AI technology. So if you go to wallets, it's very easy to deposit and exchange cryptocurrencies using their application. So feel free to take a look at the link down below in the description. You can sign up using that. And if you have any more questions regarding the project, you can refer to the video that I made earlier, which is a full review of this platform. Now let's continue with the video. Taking a look at the daily chart, as you can see, we are trying to break into this sideways channel that is set up between 12 cents and 8.5 cents. Once we break into that channel, our next major resistance is going to be exactly this local high that we've been printing for the past almost a year. Well, almost a year. So as you can see, we ran into that almost the same level here back in June 2022. So we have to break out of this sideways channel, and we have to back test the top of the channel as support, and we want to stay above that to create a solid foundation there. So we want to create a solid foundation of support in that area. Once we do that, we can see a nice move to the upside, or a bounce from that move after we see the move to the upside. So we really need to create another support level, or flip this resistance to support, so to speak. And hopefully that won't happen anytime soon, because I still want a dollar cost average into Coti, and I want to get these cheap prices below 8 cents. So as you can see, we have a major support level here at 7.5 cents. We've seen multiple back tests of support in this region over here. As you can see, back tests of resistance. So we had back tests back in November, back in January, then we broke below in March. We had a back test of support in April, and then we saw a bounce from there, and now we're coming back into that same area. So around about 7.5 cents is when you want to be dollar cost averaging, and where you want to be starting about where you want to start thinking about building a position if you really want to get into Coti. But yeah, as of right now, what we did is we broke out of this rising wedge to the upside, and now we're coming back down, and we're back testing the lower yellow trend line as resistance. So there is still a good chance that we might see a pullback. Bitcoin's very volatile, or has been very volatile for the past few days. So we might see wicks to the upside and to the downside. Now, if we continue dropping down, I would start looking at this local low that we printed in March, and I would start looking at this local low that we printed in the first half of March. So take a look at both of these lows. That's 0.07 cents, and we have 6.5 cents over here. So as long as we don't lose this low, we should be fine. If we start losing that low, that could be quite negative, and we might even come back all the way down here to this January 2023 low. And we really do not want to be doing that, because if there is a chance that we are going to be losing that, then all of this has been nothing but a lower high, and we're simply continuing in this long-term downtrend, and we don't want to do that. What we want to do is we want to start this local uptrend here and continue breaking into 2024 with a strong, solid uptrend. And I think that's going to happen only after we see a bull trap sometime in Q3 this year. So after that bull trap, we'll see another pullback, potentially a flash crash. Maybe we have some recession bearish news, who knows. But after that happens, we could absolutely start printing these huge green candles for Bitcoin, and obviously altcoins will fly as well. There's a strong possibility we could see a pretty strong, pretty decent, I would say, alt season in the next few weeks, maybe in the next month or so. And because the Bitcoin dominance is obviously dropping down, so that means the altcoins are going to be appreciating in price. So yeah, if you're looking to build a portfolio, you still have some time, but I would say at the end of this year, we're going to be sitting at prices that are going to be way higher than what we're seeing right now. If we take a look at the daily RSI, you can see that we have an ascending support trend line. We've had two bounces, once in January, once in March, and we could potentially come back down here in May if we have a pullback in May. So that's the trend line that I would be targeting for entries. For example, you see a pullback, you wake up, you don't know whether you want to buy in or not, but you see the RSI floating above this yellow trend line. Well, that's going to give you a good indicator as to whether you want to be buying or not, because the last two times we touched this support trend line, we got to the overbought twice, as you can see. So that's something to keep in mind as well. Taking a look at the weekly chart, as you can see, we broke above our major resistance trend line. So we had a back test back in October 2021, back in April 2022, in November last year. We broke out in January. We came back down. We had a wick all the way down to the trend line. So we had a perfect back test of support here. That was a very good entry point. And after that, we saw another bounce to the upside. But with this move, we have to be breaking above this local high. We don't want to just end up here and drop back down. We want to break out of this little symmetrical triangle that we find ourselves in, and we want to have a move to the upside. So potentially, we could see a breakout here. Let me just get the target for you. So we have a trend line from the top to the bottom of the triangle, and then we place it at the potential point of breakout. So we could be looking at 13 cents sometime this month or sometime in May. 13.5 cents even. So from where we are, that is going to be a 67% move to the upside. So you have to be expecting that if we're going to be breaking out. Of course, if we do end up breaking to the downside, we could be looking at a move all the way down here below this January 2023 low. Obviously, I don't think we're going to go that low if we start losing the support. What we might end up doing is we might just retest this lower support trend line and potentially just retest that low over there. But for now, it doesn't look like we're going to be doing that. And as you can see, we're pretty tight in between the support and resistance. So something's got to give, and we're going to get a decision real soon in the coming weeks. So taking a look at the weekly RSI, you can see that we have a major support block that we have back tested here as resistance in October. We broke down below, and now we came up above it in January, and we had a back test of support over here. From there, we bounced to the upside, and now hopefully, if we have any sort of pullbacks, we could just come back down to that purple support block and have a move to the upside from there. Hopefully, that's what's going to happen. So if you see a pullback and the weekly RSI is sitting somewhere in this pink support block, that would be a good area to dollar cost average, as the past few times you've touched that block, you've seen a strong move to the upside. You broke below, you had a couple of retests of resistance, and then you broke above and another backtest of support came along. So yeah, this is a pretty strong block of support set up between 42.2 down to 38.2 on the RSI. The weekly stochastic is starting to curl up, so we could get a bullish cross. And the last time we had a bullish cross here, it didn't, we didn't really have that strong of a move actually. In April, yeah, we did have sort of a nice bounce here, you could say, but still, this is nothing compared to what we were seeing back during the bull market. So if you're looking to swing trade, I would just advise you to be careful, because you don't want to sell before the price really starts pumping. And take a look at these volume candles here. This is what we're going to be seeing in the next bull market, and this is what we have right now. So imagine what are the prices going to look like in the next 2 years. Now, our bull market target is going to be $3.06 based on the 1.618, so we have to break above our all-time high price at 64 cents sometime at the end of 2024 perhaps, and then we're going to be targeting $3.06. Of course, you have two targets before that, which is the 1.414 and the 1.272 fib level, so $1.81 and $1.28. Those two are your secondary targets, so to speak. And that is pretty much everything I have for you guys. Thank you all for watching this video. If I missed out anything important on the charts, let me know down below in the comment section, and I'm gonna see you in the next video. Take care.